Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, good everyone. Thanks for joining us on the show today. I've got what was once a regular guest who I've just worked out hasn't been very regular recently. Hasn't been in the studio for well over a year, which is my remiss. I should have sorted that out. But anyway, I ran into him, interestingly enough, above the Pacific on a Qantas jet, probably about 9 months ago. He was heading back from the US and I was doing the same. I wasn't over there buying property, but he was. So I thought I'd get him to the studio and see if he can share some of his secrets. You might have seen some of his stuff recently. Todd Hunter from the Ware Group. Todd, how you going?
Yeah, good. Feeling a little unloved, but I'm back now. So,
is it my fault or your fault?
Probably both.
Both our faults?
Yeah.
Okay.
Good.
That's all right. Over the years that we've been doing this at the Smart Property Investment, we've always spoken and chatted. I've watched where you've been buying and doing what you're doing, and you're not doing anything in Australia at the moment. It's all OS. So let's get some good stuff from you to see if our guys sort of tuning into this can learn anything about buying property in the US. So,
Sure.
So why aren't you in Australia though at the moment? What do you just better options elsewhere?
Not so much. Well, yes, definitely better options elsewhere, but I just don't see opportunity here.
Okay.
So I guess if I was to categorise it, I would say that at the moment Australia is a just sit and wait and see what happens market at the moment, and I don't think there's no rush to put anything in there. There's nothing that's jumping out at me saying, yeah, this is a great deal. So for Australia, no, I'm just going to sit and wait. I think opportunity is coming in the next 2-3 years.
Okay, and we'll get to that. So you're saying it's not a good opportunity now. Sit and wait. Obviously, markets within markets, yada yada. We chat about it all the time. So you think there's no real good markets in Australia to buy right now? Is there anything at all that you like? Because I know you've been very pro Aussie property for many years.
Yeah, I have, and I still am. But I just, we're sitting in an unknown situation right now with the Royal Commission. There's the interest only maturity of loans that's coming through. There's job insecurity. There's a whole bunch of factors in here that are sort of saying, let's wait and see and let it pan out a bit better. If I was to say any market that I would probably be focusing on would probably be WA, as the coming market to be. It's sat in the doldrums now for quite a while, and there's probably a few key little spots over there that you could go and get a deal now before the market comes back. But sort of East Coast and North and South, I outside of a random 1 in 100 deal here and there's nothing that says a market or a marketplace is actually sort of saying, jump in and buy.
Okay, fair enough. And just for our listeners who might not be familiar with it, what does the Ware Group do?
We're a buyer's agency.
Yeah.
So, okay. And I guess the nice thing for us is that you'll follow wherever I'm personally investing.
Okay, so you're investing. You haven't stopped investing. You're just not investing in Australia. So having met you on a plane over the Pacific, and we had a real quick chat, and I think it was the middle of the night somewhere. It was more of a, hey, what are you doing? US is the place. All of America or anywhere in particular?
In the Midwest, I'm sort of mainly focusing.
Okay.
Yeah.
What sort of stuff are you buying?
Single dwelling homes, they call them, which is just a house, and some what they call multis, which is sort of 2 or 3 units in one house.
Okay. Yeah. And I know traditionally you've been pretty cagey on where your locations are, so I'll push as much as I can. I'll see if I can fool him into telling us what he's up to. Midwest is a big geographic area, and the stuff you're buying there's a lot of it. So buying in America after the GFC, a whole bunch of people sort of said, hey, look, it's a great opportunity to buy in America. Go to Detroit, you can buy a street of houses for 10 grand and you might get stabbed, you might get robbed, you might not get your rent, but a lot of people went and bought that stuff and probably didn't do too well out of it. I know some people during that period of time, we're probably talking 6 years ago now, did pretty well in US property. Why now? What's different now to how it was sort of back in that period of time after GFC when the whole of America had its head in its hands, didn't know what to do?
More so it's their economy and it's job security and so many new jobs are happening. Detroit is the comeback city. We were investing there, started 6 years ago. We weren't buying houses for $1 or 10 grand. Those places, you literally would not walk down the streets without an armoured truck. So it does have a ghetto, which is like every single city in the US, it has a ghetto, including Sydney. So we were in a nice affluent area. We were buying houses at the time sort of between 40 and 60 grand. Those houses now, 6 years later, are sort of between 90 and 120,000. So they've done their job. They've done fantastic and they're continuing to grow. And we were pulling yields at the time of sort of 22%.
Okay. That's pretty good yields.
It's awesome.
So I've got, perhaps it's a fault of mine, but some prejudices about investing in the US, and some of it's just situational, some of it's geographical, some of it's strategic. And I'd hope for you to try and deepen my mindset around it, maybe change my perception about investing in US properties. So let's give that a go, because I think that's probably a fair way to do it, because I imagine a lot of people probably think the same way.
They do.
My view about investing in US property is that it's not the asset itself, it's what do I do with it long term? Like, do I want to hold a whole bunch of US property and I've got to get the money back to Australia at some point in time? When are we going to realise the value? That's my frame of it all, and one of the reasons why I've been hesitant to invest in US property. Can you dispel some of that stuff for me?
Yeah, it's getting money back and forth is no problem. It's only transferring money back and forth for no reason. Okay, so if you've got a contract that proves you actually purchased a property, you can transfer as much money as you want to the US, and vice versa. You can say, I've got a contract that sold a property, or I have a rental receipt that I've received so much rent, I can move that money back to Australia. So it's all black and white. It's all on paper. Yeah. So there's no sort of terrorism financing or anything all like that going on. It's all legitimate. You buy and sell real estate the same as you would in Australia. When a market's hot, you're going to get a premium dollar. When a market's cold, you're not. You're going to have to do price adjustments. So it's very, very similar to Australia. The little bit tougher part is the property management. So you really need to ask the right questions, find the right companies and get the right people involved with your property management. Otherwise, we've already heard enough disaster stories over the years of people buying in the US, randomly probably bought with a couple of property sharks and just got ripped off and had bad property management, never received rent, sold the property and lost money because they either didn't use the right property company or they didn't do their own homework correctly.
Okay. And so the transition of money, relatively straightforward. The banking system, it's a lot more advanced here than what is in America. It's a bit antiquated over there, but you can get your money backwards. It's funny, I was over in the UK last month, and even their banking system is so antiquated. We're really fortunate here in Australia. It's pretty good, right? This simplicity and ease of our internet banking. But anyway, we won't get onto that.
I think it's the best in the world.
Oh, yeah, I agree with you completely. So the transition of money, if it's legitimate, that's fine. You get around the legislation with the transfer of funds and stuff. Do you wake up every morning, look at the exchange rate going, is it a right time to shift some cash if I'm buying over there, or how risky is it investing in the US based on sort of currency fluctuations?
When I first started buying property there, I did. Now I don't. Okay. It's been sitting in that sort of 73 to 77 cents for quite a while now. So it hasn't changed a real lot. The nice thing about it is that there's downward pressure on the dollar. So if anything, if you buy at 75 cents and you have it for a few years and we go down to 65 cents, well, then you've just actually made nearly 20% on your money. Yeah. And that's 20% on your rent, plus your house has gone up in 20% in value as well. Okay.
So there's a couple of, you diversified against the cash rate as well as the value of the property and everything going up. So location, region type, and the currency. A lot of people, and one of my hesitations about it is just it's only an issue when you have a capital event of some sort, right? When you're moving money from place to place. But if you're building your asset base in America, there's not really an issue, right?
No.
You're personally buying in the States. What's your portfolio look like now?
And I haven't counted, but I think we've just getting accepted on a deal right now, either today or tomorrow, which is going to be 30.
Okay.
So
30 properties.
Yeah, for Beck and I. Yeah.
Okay. All right. Which is a considerable portfolio.
Yeah.
What are you going to do with that? You're going to leave it there forever and just live off the cash flow, or how does it all work?
Yeah, just living off the rent. So, we're just going to continue to keep building that up till we've actually got a passive income that's just awesome, which is it's already getting really, really healthy right now.
Yeah.
And then, you can make choices in life.
Okay. So how do you go about sort of holding these assets and the legality of it all and the headache of, making sure that everything's kosher and stuff? Is that a real pain in the ass in the States, or is it just the same rigor as what it is here in Australia?
Yeah, it's no difference. I mean, you've got a nice portfolio of properties in Australia. It's the same. If you're not looking at your rental receipts and all your bills and doing something, I would say worst case monthly, but if you've got a good portfolio, you need to be sort of more looking at this probably weekly or fortnightly. If you're not doing that, then you're going to get yourself in trouble. Yeah, money's not free. Okay, so it's an investment. You need to invest time into that investment to continue it to be healthy. Okay,
and what sort of concerns you the most about your portfolio in the US?
Nothing.
Nothing?
No.
Nothing sitting you going, I don't know about this, or they're all really good assets, are they? They all perform. What about like vacancy rates and stuff? Are you got people, you're tenanted for all your properties? There's no holes?
I've probably got, I think we're filling one right now. And I've got
30 properties, that's pretty common, right?
Yeah. It's so that's not an issue. They've got the advantage of 330 million people. So they've got huge capacity to fill rentals, and the vast majority of people will never, ever own a home. So because the way their credit score system works over there, they do not even qualify for a mortgage. So they're going to be tenants for life. So filling properties as far as rental goes, no problems at all. As long as they're neat and tidy, well presented, then you can fill them, quite easily.
And how are you going with sort of debt in the US? Are you buying everything cash and just recycling? Is that the idea, or are these financed at all the properties you have over there?
No, we've got finance, I think, on 4 out of the 30.
Okay.
Yeah. And the rest of them are pure cash.
Pure cash. And that's US-based finance that you've used to finance it?
No,
okay.
Australian-based.
Australian-based finance. So Aussie lenders happy to finance property over there? How does that work?
There is. You've just got to disclose what you're doing. Okay. So if you're borrowing against equity in your home or an investment property, you can say, look, I'm looking to buy a US property. You could show them a buyer's agent agreement, or you could actually show them a contract on the property in the US, and they will take that. What they won't take, though, is initially they won't take any rent from the US for servicing.
Okay.
Until you've so much done your US tax return and then back into your Australian tax return, and you can say you have a foreign income of US rental coming in, then they will take that for servicing.
Okay, and they consider the servicing at the same rate of a property like that you're renting here in Australia. So like
I would say it'll be different for different lenders, but you'll probably find that it will be a lower rent. So where they might take 80%, they may only take 60% on that rental. But given that the yields are so high for what you borrowed, the servicing is going to be fine.
Pretty good.
Yeah.
Wow. And the questions I'm asking, these sort of questions you get most of the time from people who are looking at investing in US property?
Yeah, it is. And that's why we put together, recently put together an education series, 18-part video series that goes through every question that I could possibly think of that I've all been asked over the years. And we sort of just tried to put all this into a series where people can watch these videos and learn everything they can. Yeah.
And so you're buying in a particular area, and geographically it's quite large. You said the Midwest, right? Which is huge. So give us...
Here we go.
So Midwest. What states are we talking about there? Wow, Midwest.
Okay, so you could be talking Michigan, you're talking Ohio, Indiana, Illinois. You could be going to Missouri.
Okay. So the flat bit right through the middle there where not much happens.
Where you would say
for the industry though.
Oh yeah, lots of industry, lots of manufacturing, very blue collar.
Yeah. So how does it differ from being a buyer's agent here in Australia versus what you do in the US? Is it primarily the same thing, like identifying good value property that's going to grow over time? Is that pretty much the secret?
It is. It is. I use the same sort of strategies, except your location on suburbs in particular areas is a little bit different, just due to how they think and where they rent and where they buy over there. So it's fairly similar though.
And how do you go with the whole buying process? Because in the States, you have a representative for the buyer and the seller. So you're that representative for the buyer doing it yourself as well as doing it for your customers. You deal with the real estate agent directly. How does that work, and how does that differ to Australia?
We use one buyer's rep. So
you use a buyer's rep yourself?
Yes. Yeah. So who just takes me around and looks at all the properties that I've actually told him that I will look at or her look at. So and they do the contracts on our behalf for us. And so it's just another person in between, and then they'll present all the contracts through to the listing agent.
Okay. So and then those two people sit there and they negotiate the deal, and how do they get paid and stuff? How does that work?
So no, they will. Essentially, our buyer's rep is pretty much just an order taker.
Okay.
They'll come back to me and start talking to me about what a counter offer is, and then I'll go back with our recounter offer again. How they work and operate is generally in the US, commissions on the sort of price properties that we're buying is about 6%. Okay. So then what they'll do is the listing rep and the selling rep will go 3% each.
Okay. And it's normally 50-50 or
generally?
Sometimes? So you sort of negotiate that as well?
No, that's between them two.
Okay. They do all that sort of stuff. And is it a headache? Do you find the buying process, negotiating with Americans, more challenging, more entertaining than doing it in Australia, or is it by and large the same stuff?
I actually prefer it because I'm actually dealing with just one person.
Okay.
Yeah, so I can be in my particular area wherever I am, whereas say if I was in Brisbane, I would actually be dealing with 20 or 25 agents, and you get different levels of service from all those people. And sometimes even if you don't like the agent you're dealing with, but he has the right property, you've got to go deal with that person. Whereas here I have a buyer's rep, and our relationship's good. And if it's not good, I just go and get a new buyer's rep. So I'm just dealing with that one particular person who understands me, how we operate, and it's a good working relationship.
What do they reckon about this Aussie guy coming buying all this US property? They think you're mad, or they think you're up to something? What do they reckon?
They've never seen it before. No. So, they're loving it because of the business we're bringing. So, do they understand it? Probably not. They don't. But then again, they don't understand that the houses that we're buying for 80,000 that in certain suburbs of Sydney could be 1.6, 1.8 million. And they just go, what? That's insane.
They just don't get it. It's huge. Every now and then I'll treat myself and look at some US property, and you can buy like 20-bedroom mansions on acreage for like 500 grand, right? You sit there and think that in Australia just
it's insane.
It's insane.
Yeah.
And does that worry you though at all, that the whole idea of property is positive pressure to push up prices? And do you think you're going to see the growth over time? Is it just or a rebound back to where it was pre sort of GFC, or how do you see it sort of playing out?
Well, at least pre-GFC. So, we can see, like our Detroit stuff. So we're seeing they're now sort of worth between 90 and 120. A lot of the pre-sales or past sales pre-GFC were sort of that 120 to 140 mark. So they're starting to get to where that was there. So where we're buying right now, I've seen we're buying houses for sort of between 60 and 90 grand. We've seen past sales from sort of between 140 to 280,000.
Okay.
So it's been there before. It can get back to there. It'll take a little while to get there, but the nice part is in the meantime, you're getting these yields over 20%.
Yeah. And we've spoken over the years, your process for assessing a particular suburb, street or region, suburb, street, asset type, etc. It's the same in the States. You use the same process to determine whether or not it's an investable asset or a non-investable asset?
It is, except, yes, it is, but with the US, and it varies a little bit in cities, you tend to find the more affluent areas are on the outskirts of cities, except for a few cities which are now saying we've got so much traffic issue that they're actually now changing that philosophy. So they have affluent on the outside, okay in the middle ring, and then affluent again in the inner city. Okay. So because the traffic congestion's insane. So you got to look at each city individually and assess that. So, but as far as getting in early, buying the right properties, and similar to what I did in Australia, it's a lot of that's the same.
Yeah. How many flights you done across the ditch the last year or so? Pretty regular.
Yeah, I reckon I've been 6 to 8.
Okay.
In 12 months.
Okay. And you're on the ground there for a while when you do sort of get there?
Yeah, generally on the ground for at least for a couple of weeks.
Okay. Do you like America?
Love it.
Yeah. Like Americans? Or you like America?
Yeah, I do. Yeah, I like, there's good and bad things about it, but yeah, I definitely love it.
Yeah. That's cool. And the areas that you're buying, how do you go about it? You just walk the streets, get a feel for it, understand it? Is it looking through the online platforms? Is it talking to agents? How do you get a real feel, ground truth for a particular area you're looking to invest in?
It's always time on the ground. Always. So you can do all the internet homework you want, and I'm the same in Australia. Is that all the internet research that you do is all good to a certain point. If I walk into an area and I don't like it, I walk out. I've done it in probably at least a dozen places in Australia, and I think I've done it now probably in 6 or 8 places in the US where I just don't get a good feel. I'm not going to put my own money there, so I'm not going to put your money there.
So what are the sort of 3 red flags for you when you go, no, I don't like this place?
It's a bit of a feel. It's does it feel like there's nothing happening? Is there vacancy in the shops in the main street of town? I remember years ago I was in Whyalla, and I flew over to Whyalla, and way before the Whyalla boom. And to be honest, I probably got that wrong in respect, but I'm sort of still glad I didn't buy there. The 2 main pubs in town were boarded up. Yeah. And I went, man, this is a mining town. Okay, so if you've got pubs that are boarding up, where are these miners drinking? Yeah. So I just went, no, I'm not happy here, and flew out.
Okay.
Yeah.
The pub index.
The pub index.
It makes sense though, and this is
economy.
Unless you've got an eye for this sort of stuff, often you don't see it, right? It's all about the livability of a place, right? How livable is it? Well, if your pubs are closed in a mining town, there's obviously something wrong.
Something's wrong.
Something definitely wrong. And in America, what's wrong? The Chuck E. Cheese is boarded up, or the Wimpy Burger or whatever it is.
They love their fast food.
They do. In-N-Out Burger, though. Have you had one of them?
Yeah.
Oh, so good.
Yeah. My favourite.
Yeah. They do like their fast food, but I've been in the States. I've lived there for a little while as well over a number of different times, and they're wired differently. The way they see the world is different, but fundamentally it's the same sort of stuff, right? It's the vibrancy, the spirit, the attitude, the optimism in a particular area. When you go to a place and go, no, this is on the way down. But often, if you're a good property buyer, you'll go, it's down and out, but it's on the way back up, right? And that's what you look for, isn't it?
Yeah, it is. Most definitely. So you've got to look for those employment opportunities. So is there people moving to an area because there's big announcements of big companies moving into an area or opening up more and we talk about companies opening up in Australia. They go, well, they've just employed 150 people. Over there, they go, it's big. We've just employed 2,500. And they do that in a week.
Yeah. And when you look at the type of Aussies who are going away to and looking to invest in American property, what do they look like? Are they just mum and dad investors? Are they wired a particular way? What's your client sort of base look like?
It's slightly changing. There is lots of mum and dad investors. There's not so much what I would get more in Australia, which would be sometimes we're getting lots of the people who can't afford, say, Sydney or Melbourne, who want to invest and just as rent investors. We're not getting a lot of that. It's more we're getting lots of people now who are walking through the door and say, I've got 1.5 million in the bank just sitting there in cash. What do I do with it? And you tell them about the yields and you show them the houses and they just go, I'm in. So I'm getting more of that, people who are cashed up, ready to go.
Lazy capital.
Capital, just sitting there. Don't know what to do with it. You're getting lots of equity buyers, mums and dads that are still doing it. We're getting lots and lots of self-managed super funds, especially now with, Westpac and St. George getting out of the lending market and self-managed super funds. Yeah. What do they do with their money? How do they buy? What do they do? So this is good the way they can just pay cash for a house. Is
it hard to do it in your self-managed super fund, or they're happy with those sort of assets, offshore assets in your super?
That's fine. No, that's good. It's easy. Yeah. I think Beck and I have got 6 or 7, I think now in ours.
In your super fund?
Yeah.
Okay. Because a lot of people have that sort of capital where you pay in cash out of your super. So, I never really thought about it in super fund. That's really interesting, mate. Is there certain sort of clients come your way, you go, no, I don't really want to be dealing with them. They don't really get the US opportunity? Or do you find that when people actually get to talking to you, they've sort of got over any sort of prejudice that they have around it?
They do. Once they've watched their videos, a lot of them will either sort of make their own decision on that. It's, for me to take a client on, I'm not going to take a client on who I know who's not ready. I'm not going to fly to the other side of the world for somebody to buy them a house if I know that they're either not fully sold on the idea or they don't believe in it. Yeah. As an investment strategy. So we are more selective on who we're taking on board with that respect. But it is nice. We're seeing we're just seeing people come out of the woodwork who we've never personally seen in the business before. And now, funny enough, we're actually starting to get international clients, which we as a business, I've never had international clients, not expats, international clients.
Who are coming to you in Australia to buy property in the US?
Who live in the UK.
Okay.
Yeah, you live in Dubai, live in the UK, live in Ireland, who want to invest in the US, who want somebody to do it for them, and they've got no avenue to do it themselves.
Is there anyone like you in the UK doing this sort of stuff, or no one's really outward looking?
No, there is. Yeah, I believe there's a couple of companies over there that are doing that. Yeah.
You enjoying it though? You like the travel?
I don't like the jet lag.
Yeah,
I do enjoy the travel. It's not too bad. It gets a little tough sometimes, but it's going through TSA at the airports in the US is just
pain, isn't it?
Oh, it's a pain.
Do you normally fly into LA or San Fran?
Any of the three. Yeah, any of the three. Yeah. I guess it depends on the airfares for getting over there.
Yeah, always fly Qantas.
Yeah,
good airline.
Yeah. Awesome.
Yeah, they're pretty good. Oh, it's really interesting, Todd. I can see the opportunity. I can see why a lot of people would be looking to diversify portfolios, considering. There's a couple of things. One, the current state of the Australian property markets and Sydney and Melbourne, depending who you talk to, softening. Some areas more than softening. Other areas in those markets are doing pretty well. I tend to agree with you in terms of the speed to need to invest in those markets. I think there's going to be some great buying opportunities in Sydney in particular.
Absolutely.
In a couple of years, and personally I'm cashing up for that environment. The challenge you have though is that, you've got to make your money work for you still. So, you can chuck that cash into an offset and, if it's in an offset, you're getting 5% on your money, or you're chucking it over in estates and you're probably getting a lot more than it. What sort of average yield you getting over there?
Grossing generally between 20 and 22%.
Okay.
And which when netted out is between 10 and 14. So
okay.
Positively geared by 10 and 14.
And capital growth, it's by and large pretty good?
Well, where we're buying right now, it's very, very minimal because we're buying at the right time.
Yeah.
But previous cities we've bought in, like Detroit, Cleveland, Columbus, Cincinnati, we're seeing really good growth. And a lot of our Detroit stuff has doubled.
Who's your baseball team? You got one yet? No.
He's fishing. He's fishing for a city. I nearly fell for that too.
Yeah, I know. Or maybe you're an NFL man, so
actually, it's the only US sport I haven't actually seen live. I want to go, but and it starts shortly.
Yeah, the best thing about NFL is the car parking, tailgating, whatever you do before. It's such great fun. It's better than a game itself, but I won't go into that. Maybe I have to come over and check out some of this property you're buying and we can go to a game or something else. But I know that and managing a property in the US is different, right? Like, going back to the banking system is pretty antiquated. It's a bit of a headache. So most people pay their rent in cash. Is that a myth or is that reality?
I think you'd probably find in country towns that's probably still a reality.
Yeah.
Now they have clearing houses.
Okay.
So it's not quite a direct debit, but it's a clearing house which is similar, and they can do that. They can be paid as well. Okay. So the technology is coming. The issue with the technology is that the banks don't talk to each other. Most banks in the US are ma and pa owned.
Yeah.
And they're
really localised, aren't they?
Very localised. Yeah. And they could be just a franchise, but still ma and pa, and the transfer fees are just huge. So the clearing houses are actually made that very economical for people to do it. And most tenants in major cities now, that's how they're operating.
It's easy to open like bank accounts. So as soon as you're a property owner, opening bank accounts is pretty straightforward and all this sort of stuff, or is that still a headache?
No, it's straightforward, but you have to be there. If you want to open a US bank account, you actually have to be there. Yeah. So the Patriots Act doesn't allow them to do it otherwise. But all the major banks here now offer foreign currency accounts.
Yeah.
So you can have your rent paid straight into Westpac, Commonwealth in US dollars.
Is it what most people are doing, is it? Because I carry sort of UK and US dollar accounts in my Westpac. So okay, so it's easy. So you can sort of mitigate and navigate it all around that. Yeah. And what are the property managers like? So are property managers typically part of a sales office or are they independent?
Depends on both. Depends on how big of an agency you go to.
Yeah. And they're generally pretty good. They sort of collect the money and pay you cash and...
Generally are, yeah. Some of them are a little bit more country or a little bit more sort of lax. Yeah. You sort of go, it was due on the 5th and it's the 8th.
Yeah.
But when you get to the bigger firms, you know that they're very procedure-based.
Yeah. Okay.
Same as Australia.
Same as Australia. And, there's good property managers in Australia. There's great property managers in Australia. There's some pretty crap ones as well, right? So
the vast majority are.
Yeah. Well, I'm not going to go there. I think property managers are great, they do a great service. But, you can speak from experience. You've got quite a lot of property. So when is your US portfolio going to supersede your Australian portfolio in terms of numbers of property? So we're just on, like I said, we're just on doing 30 for the US now. Australia we've just sold 1 or 2 in Australia. And I think we're at 52, somewhere there. So I would say within 12 months. Yeah. So you're not going to stop. You're going to keep at it, right? I'm averaging easily 2 a month myself. Okay. Why? Just because you can? Yeah. Yeah, and I just want to keep the passive income increasing. Yeah. Yeah. Fair enough. That's pretty cool. Yeah. Yeah. And you're not hitting up your Aussie property to get that cash? Is it sort of, or you're using equity out of your portfolio here to realise it? No, these are all cash purchases. Cash purchases. Yeah. So I've been cashing myself up ready for probably what you call the Australian Armageddon, which is sort of that position where we're sitting now. Yeah. I've been doing that. I've sold a couple of Australian properties, and we're up from that. Yeah, we are. We're renovating home. Okay. So I don't want to get a loan to renovate home, so we're paying cash. So I've been doing that, but outside of my first few, which I did do some equity, I think it was the first 4, we had a loan against, but now the remainder have all been cash. Okay. So the yields are fantastic. Like they're true yields. So you've got a lot of working life left in you. You're not an old bloke by any means. I think we're about the same age. You could probably choose to stop working now. So why? Like why you keep at it from a personal level? You like the hustle, you like the game, you like the fact you can do it, you like to win, all the usual stuff, or is it just this what you do? It is. I still enjoy it. I still like going over there. You've got to keep active doing something. There will be other things that will come into my life soon that I'll say, look, this is where I want to start to focus a little bit more attention on. The company's good. We've got a team coming through that are be able to take over some of my role, if not all of my role, and I'll still be there. So guys, don't worry, I'm not leaving you. But this will be some other choice in life that I want to do. That's cool. Yeah. But you worked hard, you get to make that choice, right? And you never know when you're going to tap out, do you? You never know. So you never know. Oh, it's good, mate. It's nice to reconnect after quite a hiatus of a year or so, I reckon. Yeah. It's Yeah, always interested to hear what's getting on. And if you go back to the archives of smartpropertyinvestment.com.au, you see quite a lot of stuff that we've done with Todd over the years. We did a thing once called the Property Hunter. Remember that?
I did.
Where we went
with
and
Andy.
sort of we went and you walk by memory. You walk into a place and go, look at this, look at this, look at this, look at this. Here's all the stuff you need to be looking at when buying a property. It's still as relevant today as what it was back then. So
It is, and we're I've going to the US for a second, but we've actually got a rehab team over there now, so we're actually doing all that work over there.
Okay, so I was going to ask you about that. We'll keep going. It's all right. So you got your own team of guys who'll go in and fix stuff up.
Yeah.
Okay.
Yeah.
So
I can
so
buy,
they manage the contractors. That's a different game as well. The whole contractor thing in the US, right? They're a bit quirky sort of culture with that.
It's taken me 6 years to get the right team that I've got. So we've got two building teams that are there. So I can either go from cosmetic renovation to I can rebuild a disaster zone. So we've got full rehabs.
And they completely work for you, do they?
Yeah.
That's your team? Well,
Yes.
Contractors, obviously, but they're dedicated to you.
Yeah.
Okay, that's good. You need it. That's an advantage to have, right? If you
It
can,
is.
Often finding a property which might be cosmetically challenged means you can pick it up for a song and spend a few bucks, and that's buying under market.
As you know,
property.
which is sort of how you like to invest.
Yeah. Let's get you writing some more stuff about us for this property thing. I think it's hopefully he can sort of unveil exactly where. How many properties have you purchased in the States now? Do you reckon? Not you personally, but for your clients.
Probably between 300 and 400.
Okay, so quite a few.
Yeah.
Is there anyone that it doesn't suit, do you think, investing in the US?
I would say it doesn't suit anybody who just wants one house over there.
Okay.
For the setup, the time to set up, the learning how it all works. There's a few extra costs each year, like you got to do a US tax return and things like that. It's a little bit more to manage than what an Australian property is. Not a lot more, but just a little bit more. I would say if you're only going to buy one, don't. Just hold your money, wait for Australia. If you're looking to build a portfolio, then it suits you.
Okay. What about Aussie? If you were buying, where would you be buying?
Probably over towards Perth, near the airport, High Wycombe.
Yep.
I think it's called Forestfield, next door, where the new train line's going in. I would be focusing there before the train line opens, I believe, late this year or early next year. That's probably where I would say, I'd put my best dollar. Or even on the coastal side of Perth, up towards Butler, through there's a few coastal suburbs there that are where they've done the extension of the freeway through there, which are going to certainly open up just a little bit north of Joondalup. So I'd be getting early. The Perth market is starting to change. It's showing those signs. The thing is when it's going to hit hard, which Perth always does, it just goes 100 mile an hour. So if you wait, you're going to miss.
Okay, there you go. You heard it direct.
There you go. Gave you some locations.
Close you can get from him is some generic suburbs.
And FYI, I already own there.
There you go. Of course you do. When did you buy there? Recently?
No, a little while ago.
No, okay.
Yeah.
Very vague. This is the way it is on the Smart Property Investment Show. You get these buyers agents in who think they hold the crown jewels and they won't give you anything. But anyway, nice one, Todd, mate. I appreciate you sharing your story as well. And a lot of people don't like talking about their own personal portfolio, but thanks for sharing what you're doing with that. And it's a sizable portfolio, and it's great to have a big portfolio. It becomes a lot of headaches as well. And I think a lot of people don't really appreciate that sometimes until they get quite a large portfolio.
Absolutely.
It's not all roses and I don't know, whatever else to say.
Like I say, money's not free.
Money's not free. You've got to work for your money. But let's get you back in again soon. All
Excellent.
right, nice one. That's Todd Hunter. He's from the Ware Group. You said you got some videos and stuff. Are they available to anyone if they want?
Yeah, they are. It's free. All they've got to do is just go to the website, waregroup.com.au, and register, and then the videos will start coming through on an email for you. Okay. And there's 18 of them. We're going to simplify that shortly, but at the moment it just covers absolutely everything. So it's good.
Cool. All right, and check out smartpropertyinvestment.com.au. We'll do some more buying the US stuff in the future. I think it's worthwhile. Todd made some valid points about why you should potentially be considering the US if you've got some lazy capital in particular. It's good yields out there, but I still need to. I'm not going to rush out there and do it myself. I need to probably spend some more time myself thinking about it because before we come on air, I was talking about what my plans are, and I'm cashing out at the moment, waiting to capitalise on what I think will be good buying in the future in Sydney. But maybe I'll have a look at it. Let's watch this space. I'll let you know what I do. If you're not yet subscribing to Smart Property Investment, you can do so, smartpropertyinvestment.com.au/subscribe. If you'd like to get your info from social media, you can do that as well. We're pretty active. Just search Smart Property HQ. You can find us and like us and follow us. And please keep those reviews coming on iTunes or wherever you're listening to this. 5 stars are great. Any questions for me, or even if you want to, stress test any of Todd's remarks, you can email the team. We'll get them answered. Editor at smartpropertyinvestment.com.au. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property, or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.